something very new into the market. When we launched in the beginning, it was a very difficult journey. Okay, Mama Lisa would know, it wasn't easy. I met quite a number of people, she kept bringing people to me, oh no, this is da. But, with the grace of God, we managed to have all of you guys here today, right? Please give a round of applause for them. Today is Sunday, yeah? Okay, today is Sunday, it's 7th. I'm not supposed to be working. Okay, so what is this product actually? Okay, so we all know that today, the financial landscape is changing. Things are becoming more and more digital. Okay, and because of that, cryptocurrency is actually here to stay. Why I say that? For example, I don't know, 10 years ago, do people use a lot of cash or do people use more GPay? You get Gcash. Okay? 10 years ago, people use Gcash? No, cash. Slowly, trust me, more and more things will become digital. And when things become digital, you can't touch, you can't feel, it's just numbers. People get a bit, not so certain. But the mindset is changing. And because the mindset is changing, there needs to be new product to be launched into the market to actually help with all this. And what we're actually doing is to actually help to mitigate risk for everyone that is actually participating in cryptocurrency. So the crypto market has problem. Okay, two biggest problem. First biggest problem is it is actually highly unpredictable. Today, hacks can happen anytime. People can lose their wallet address, lose this, and then there's a lot of scams ongoing. It's very unpredictable. And in fact, there are many cryptocurrencies that you can go up 10 times, 20 times in 2 months, but it can come crashing down very fast as well. So it's highly unpredictable, it's highly volatile. And because of that, we need something to actually give a safety net for everyone. And that in itself is the value that we provide. I'll talk about the importance of this at the end of everything. Okay, so first thing that we provide is, of course, a safety net for everyone. Secondly, for myself, most of you guys know me, I'm actually handling all the risk calculation, risk modeling in the company. Risk mitigation is something that's very important, and we believe that there's a need for this in the market. And lastly, everything that has value needs protection. And that's the reason why people buy insurance. The reason why you guys will buy insurance for your car, for your watches, for your life, for everything is because it's of value. And that's the thing that we provide. So all this I will speed up a bit more because yesterday we touched on a lot. I'll talk about the technical details later. So, as you can see, these are the top 4 cryptocurrencies, and these are the instances that it has dropped more than 30% in 1 month. Okay, why we did not choose 10%, 20%? Why we choose 30%? It's because based on historical data, before we launched this, I actually, with me and my team actually had done a lot of research to see what is the best optimal level that we can give protection to all of you guys. Okay? Because for a cryptocurrency to drop 10% in one night, in a week, in a month is quite common. Right? How many of you here actually have buy cryptocurrency? Raise your hands, please. Don't worry, I won't borrow money from you. Huh? Okay, so I believe all of you guys, have exposure to cryptocurrency, and it's very common for, even for the 4 big coins, 4 biggest coins to actually drop more than 10% in 1 month. 20% happens quite often as well, but 30% not so often. And for us, why we actually have to set the threshold and the benchmark at 30%? Because it is something that doesn't happen very often. And as an insurance company, as a capital protection company, okay, we actually have to factor all this risk involved. Okay, and probability is something that we constantly look at. So, why do we choose to launch this product now? Why? Okay, 3 main reasons. Reason number 1 is because Bitcoin within the next couple of months is going through what we call the halving. Okay, how many of you here know what Bitcoin halving is? Okay, quite a number of you guys, but most of you still don't know. Okay, so in short, Bitcoin halving is basically, how many of you here know how Bitcoin is being produced?
Algorithm.
Through mining, right? Mining, yes? Okay, so what happens with halving is that if you can look at it later, I will show you in the chart. Every 4 years, it will be mining half less than the past 4 years. Which means the amount of Bitcoin that will go into circulation will be lesser every 4 years by half. But the mining, the processing power you need is substantially higher. Okay? So that's the reason and the mechanism of Bitcoin. Okay, I believe, how many of you here know what Bitcoin is? Can I have a raise of hands? Okay, I see a lot of people still don't really know what Bitcoin is, so I'll touch a little bit on that. Okay, so Bitcoin halving is important. I'll show you the chart later. The second most important thing and third most important thing is because the Securities and Exchange Commission in America, after a few years of considering, have finally decided to approve Bitcoin ETF. Okay, and what this actually means is that it will bring institutional investors to actually come in. And when we talk about institutional investors, I'm not talking about 100 million, 200 million. We are looking at about 50 billion of fresh funds that is expected to come in just from institutional investors alone. Okay? So this is a huge amount of money and it will push the Bitcoin price up. And of course, London Stock Exchange also recently announced they're going to approve ETF, which is exchange traded notes. So this is the chart I want everyone to take a look at. Okay? So if you realize, Bitcoin halving is a bit like the football World Cup, it's a bit like Olympics. Every 4 years, it will halve. Okay? And as you can see over here, this is the past 3 times it has halved. This year is 2024. So in 2020, 2016, and 2012, Bitcoin have actually did the halving. And one phenomenon that we actually realized with the Bitcoin halving is that every time when it halved, okay, this is the time where it halved, this is the Bitcoin price at that point of time. So you just imagine at that point of time when it halved, okay, is at this price, about $10. Can see? Roughly about $10. Okay? And after it halved, 365 days after the first half, the halving of 2012, it actually went up 8,000%. Is that amazing? Okay? And after 2016, same thing, it halved, it went up 200%. So on and so forth, after 2020, 500%. So why is this actually very important for us is if you can see, after every single halving, basically the next 4 years, it never went below the halving price. The price will by half. Same thing over here, after it halved, the price never ever went below this date. Can see? You guys can understand? And similarly for this, after it halved, it never went below this price. So, this is actually fair to say, if we look at historical data, every time when Bitcoin halved, the price has to go up. The reason why it has to go up is because number one, there's lesser supply in circulation. And number two, you need more computers, more electricity to mine all this Bitcoin because the complication is getting harder and harder. So in order for Bitcoin to survive, the miners have to make sure that it's worth it for them to mine. And for that to happen, the price has to go up. It's inevitable. But of course, when it goes up, in between there's also a lot of volatility. It can go down 30%, up 100%, down 30%, it happens. And because of that, for us, that's the reason why we exist. And that's the reason why we launched this product. So, first of all, based on historical data, we can see the price of Bitcoin after every halving goes up. So, what's the better time? What is a good time to launch?
Today.
Now. Am I right?
Yes.
Yes?
Yes.
Yes. Okay. So the next thing is actually the institutional funds that is coming in with ETFs and with ETN. Why is this actually important is because majority of the people actually are not involved in cryptocurrency. Am I right? Why?
They don't understand.
Number one, don't understand.
Yeah.
Number two, I don't know how to buy. Number three, I don't know how to use a computer. My father's case. Okay, so but with institutional investors coming in, what actually happens is that, down the road, people like my father can call the banker to say, I want to have exposure in cryptocurrency. And essentially, the banker will actually help him to open up exposure with ETFs or ETN. Okay? So we must understand one thing is that why we decide to launch now is of course also because the market is actually starting to get more and more mature. As with all new asset class, it is always very volatile. But as more and more people come in, the market becomes mature, volatility will decrease. Okay, and that is the reason why we believe that this product is the best time to launch now. Okay? So, for us, our objective is actually very simple. Of course, we also have certain reason why we do certain things. Okay? For us, the reason why we launch this product is because we want to go into a demographic of people that is currently being untapped. Okay? There are many crypto players in the market. And when I talk about many, I'm talking about hundreds of millions. These are the top 5 exchanges that is most recognized. I believe most people know Coinbase, Binance, OKX, Robinhood, KuCoin. Just the 5 exchanges, excluding there are many, if you include the top 10, there's a lot. Just the top 5 exchanges, we are talking about a total registered number of users of more than 300 million. Okay? Of course, some of the people, I have account in Binance, I have account in KuCoin, you cannot count it that way. But for us, actually, we're just looking to tap at just 1% of these potential people. Because even as of now, we are already talking to the people from the exchanges. And they are keen to onboard our product to actually sell to their clients. But they want to see how we execute first. And once we have a track record, trust me, we will be onboarding with them. Okay? So, just talking about 1% of the user base, we are already talking about more than 3 million users. Okay, just now Mr. Spencer, even just now earlier, last night we mentioned this year our target is we want to achieve 1 million users, right? But by doing one person introduce another person, it's a slow process. To achieve 1 million is not so easy. But if we can tap into the cryptocurrency space and we can immediately reach out to potentially millions of users, to onboard them is way easier. Okay? Why we want to launch this product is because we want to test a new concept. And I believe this new concept works because I worked out the numbers. Okay? So just imagine, how many of you here have $100 US? How many? Okay, I believe everyone should have $100 US, right? Imagine this 3.7 million people just try with $100 each. We are talking about 300 over million worth of revenue to the company. Okay? What if it's 1,000? We are talking about 3 billion. Okay? And with this amount, we can definitely do a lot more things. And I'm going to explain how we're going to deploy the funds and why we can sustain. Alright? So, these are the 3 main coins that we are providing protection for: Bitcoin, Ethereum, and BNB. Why these 3 Bitcoins is because these are the coins that we feel that right now is the most stable. It doesn't have too much of the volatility. And essentially, just these 3 coins alone, because those just now, the figure 300 million, are exchange accounts. But there are a lot of people who put their cryptocurrency in the Trezor, in a cold wallet, or on a handphone wallet. Those are not accounted for. Total amount of holders is actually more than 800 million. So we are talking about a potential market size of more than 1 billion possible users. Okay? Can I have a round of applause? 1 billion possible users. we are talking about 10 million. Okay? And right now we are just talking about 1 million. We want to hit 1 million. But trust me, we are looking far more ahead than that. Okay, so before I go into this slide, because every time I go into this slide, I believe a lot of people are very confused. Okay, how does this actually work? Okay, so before I go into this slide, I want to explain this thing first, called a knock-in option. Any one of you here have heard before of this thing called a knock-in option? Knock-in. Knock-in or knock-out option. Okay? So basically, a knock-in option is a structured product that we actually launched in banks. When I was a banker, we actually sell products, a knock-in, knock-out product, to what we call high net worth clients. Okay? And all this knock-in, knock-out product option is basically only applicable to what we call accredited investors. Okay, because in order to become an accredited investor, they need to have at least $1 million worth of investable asset. And number two, have a monthly income, a yearly annual income of more than $300,000. Because per lot size, when they do a structured product for knock-in, knock-out option, is $250,000. So to normal, typical retail investors, you guys may not have heard of it, but for clients with a higher net worth, you guys should have heard of it. So let me explain a bit of how this works. For example, today you have $250,000 lying in the bank. Okay? You want to buy a tech stock. For example, either Tesla, Amazon, or Apple. Okay? So right now you can choose to buy it, but maybe you feel that the price is a bit too high. So what we as a banker, we can actually do, we will actually take your funds, we can create what we call a knock-in option. Which means your $250,000, you can purchase this knock-in option. If the price drop maybe 10 to 15% below the current price, your $250,000 will be converted into that share. Understand? Understand this part? I can see some yes. Okay. So most of you guys try to digest. Okay. Why would we actually recommend our clients a knock-in, knock-out structured note? Is because it's very simple. Number one, your $250,000 you put in the bank, you're not earning anything. Maybe just interest, very little. You have intention to buy a stock, but you feel that it's a bit too high. So either way, you want to own this stock. If it drops 10 to 15%, will you buy it? Yes? Because you want to buy Facebook, but now too high. Hey, now it's 15% cheaper. Would you buy it? Yes? Okay. So first thing first, what happens is that your $250,000, if you buy a knock-in, knock-out option, if the shares for Facebook, Apple, whatever, whichever share drop 10 to 15%, it will convert this $250,000 into the share. So you will hold the share. But if within this 1 year, it doesn't hit that price that you want, the bank will give you 8 to 12% interest per year. Okay? So, does it make sense for you to keep your $250,000 in the bank? No. You would rather buy this product. Because either way, either you are getting the stock cheaper, or you are getting 8 to 12% a year. Am I right, Ms. Annabelle? Yes. Okay, so this in itself is what we call a knock-in, knock-out option. So similarly, what we're actually doing here is actually what we call a knockout option, because we are selling the underlying asset. What I explained is knock-in, basically is cash. Once it knock in, you buy the underlying asset that you want. This is the underlying asset will be sold. So it's knockout. Okay, so for example, today you come in, with our digital asset insurance with 50,000 worth of Bitcoin. Okay? And you lock in the value at 50,000. So the first thing you will see is two thresholds. One is the upper threshold, okay, which is up 30%, and the other one is a lower threshold, which is minus 30%. Okay? What happens is that we all know that Bitcoin will not stay at 50,000 forever. Right? It goes up, it goes down. So if it goes up, what happens is that it will hit, let's say it goes up more than 30%, it hits its 65,000, 30% threshold, it will trigger a sell for the knockout option. Basically, the Bitcoin will be sold, And because you guys are under protection with the company, okay? You guys are under protection with the company, 50,000 your capital you take back. Okay? 15,000 profit, half of it you split with the company. Okay? This part everyone understand? Of course, people ask me, Max, if I know Bitcoin will go up, why do I need to give you half? Right? Fair question. Okay? But you must understand one thing. Today, sometimes, some things can go up, but it can come down very fast. I give a very simple example. Burj Khalifa, the world's tallest building. Okay? Most of you would have known it, right? In Dubai, the Burj Khalifa, more than 800 meters tall. There's one guy that actually climbed the Burj Khalifa building before. It took him 6 hours. He's called the Spider-Man. You guys can Google online. He climbed the exterior up. Took him 6 hours to climb up to the top. Okay? He's the fastest climber right now. But to come down, how fast do you think it can be? Few seconds. Right? So a lot of people say, oh, sure go up, sure go up. Trust me, when it comes down, it's faster than we go up. Understand? So that's the reason why our product exists. Because second scenario, if you look at it, Bitcoin can also drop, right? If it drops more than 30%, what will happen is that your value right now will not be 50,000, it will become 35,000. And when it becomes 35,000, same thing, you will trigger the knockout option whereby we sell the underlying asset. You will take back 35,000, which is your capital, but the 15,000 loss will be borne by the company. So which means you will actually receive 50,000, which also means you can buy more Bitcoin. Okay? Can I have an applause for that? The next thing is, of course, Max, you say that institutional investors are coming in, it's not going to be so volatile. What if this 1 year it doesn't go up to 30%, it doesn't go down 30%? What we're going to do is we're going to give everyone an options rebate of 3 to 5% every single month. Okay? Which works out to 48%, roughly 48% per year. Okay? Is that good? Okay, how many of you here have Bitcoin? Okay, don't worry, don't be shy. I won't loan money from you, although Bitcoin went up a lot. Okay? If you're putting your Bitcoin in a wallet, it's not going to generate anything. But if it comes here, we can give you return. Okay? I'll elaborate more on how we can give you this return. Everyone's curious, right? So, this is a summary. Okay? 30% up, basically profit, split 50-50. 30% down, your value is left with 70%, ProCap will top up the 30%. The value doesn't go up or down, 30%, basically will generate a monthly option rebate of 3 to 5%. So, how many of you here wants to know what we actually do, how we give you 3 to 5% per month? Curious? How you ensure that drop 30% you can pay? Correct? Curious? One thing for sure, we will not be taking this Bitcoin and putting it in a wallet somewhere. We will definitely use this to generate returns. This is essentially how life insurance company, all insurance company is doing. The money that is giving to them is not lying there waiting for something to happen to you. Okay? The money that comes in is going out to generate returns. And when something happens, they take out the return to actually give it out. So, for us, the asset that comes in will actually be deployed out. Of course, a percentage will actually be in reserve, just in case there's any downside scenario that happen. So we need to have a reserve pool. Secondly, we're actually going to launch 2 things. Okay, so first thing first, we have one thing called a lending strategy. So within the next couple of months, we're going to launch this thing. Basically, we can actually lend this money out and earn interest. Okay, I'm not going to talk too much about details here, but this is something that we're going to launch. But the most important thing I want everyone to take a look is actually this thing called the System 7. Okay, if the 1 year that has passed has anything that's important, the most important thing is it has shown us that our System 7 formula works. Okay? I remember last year I spoke to Miss Violet. Okay? We were at a dinner table side by side. She's saying, Max, really? Ken? You think this one really okay? Remember? At Sheraton Hotel, where Mem Lisa held the event, I remember. Okay, so for the past 1 year, if you look at our records, the System 7 formula itself works. Okay, right now I want to ask everyone this question. On average, if you win on the first hand every day, how much are you getting? How much a month? 6% a month, right? The 6% is after company collected its premium. Yes? So, in actual fact, the actual winning is 12%. Okay? So imagine, for the company, we deploy funds here. We don't need to split half with clients. Yes? So essentially, if we win on the first hand every single day, how much are we getting? 12%, right? If I can win 2 hands per day,
24.
how much?
24.
How about 3 hands per day? 36 in 1 month. Am I right? So, of course, for us, and this is, I'm talking about if you're winning every day on the first hand. If you win on the second hand, if you win on the third hand, you guys do the calculation and math yourself. Alright? So essentially, funds will be deployed here to actually generate returns. The first thing that we need to do is to make sure that we earn back the 30%. Anything that we earn more than 30% basically is company's profit. That's number 1. Number 2, how we can give everybody 3 to 5% a month is also coming from here. Because with this, we can easily give everyone more return. You understand? So essentially, I want everyone to picture this. The funds that come in from the crypto or the digital asset insurance, of course it's not going to sit somewhere. It's going to be deployed into System 7, whereby the company will earn the full 12% if you win every day on the first hand. If 2 hands, you guys can do the math. And that's how we actually give everyone the protection mechanism. So funds that comes in actually will be deployed into System 7 and lending to actually protect us against any 30% downturn scenarios. Okay, can I have a round of applause for that? Okay, yesterday my slide stopped here. Anyone wants to know how everyone can benefit if I introduce someone who comes in with digital asset insurance?
Yes.
Yes?
Yes.
If I introduce, what do I get? That's an important question, right? Okay, so for us, we actually also have a rewards plan for the digital asset insurance. Okay? And mainly there's only 2 types of rewards. Number 1 is actually the incentive reward, which is basically like a introducer reward. And secondly, for leaders will also generate rewards. Okay? So, how does this work? How does this work? So incentive rewards is a very straightforward thing. Today you introduce a client A. This is you. You introduce client A. He participates with 10,000. Basically, you receive a 5%, which is 500. Easy to understand? Any question? No, right? Okay. The next one is actually the leadership reward. And it's a bit similar to what we have, 1 star 1%, 2 star 2%, so on and so forth, 5 star 5%. So how does this actually work is, basically, today if you are a 2 star, and within your group, there's this person with 1 star, and he introduced somebody, he will receive 1%, you will receive 1%. Understand? Lost? Anyone lost here? Yeah. Lost. Okay. Okay, so for example, you are 2 star. Okay, under your group, maybe no star, 1 star. Then this person introduced somebody. okay, come in with 10,000. He will receive 1% because he's 1 star. You will receive 1% because you are 2 star. You're supposed to receive 2%. Okay. So what happens if this? So you are 2 star, no star, no star, no star, no star, and he introduced 1%. So you will receive the full 2%. Understand? Yes? Okay. So this one also straightforward. You are 2 star, no star, no star, no star, 2 star. He introduced 1%. You don't get anything because you receive the full 2%. Okay? So this is essentially our rewards. I think it's very easy to understand. And for me, before I end, I always like to talk more about the insurance industry. Okay, so why is this product very, very important for us? Okay, I don't think a lot of you guys understand the importance for us, why we feel this is very, very important. Okay, today if you look at the insurance industry, okay, it has actually created a lot of other big industries. For example, can I have a raise of hands? How many of you here have a car? Okay? Quite a number of you guys have your own car. So, right now, imagine, okay, so every car have to buy a car insurance, am I right? Imagine if the whole insurance industry never existed. Okay? I want you guys to think. Imagine you buy a car, but you can't buy insurance. Which means, if you get into a car accident, you have to bear the cost yourself. Can I have a raise of hands? How many of you here will still buy a car? Bear in mind, okay, I see 1, fair enough. 2, maybe you need to travel. But you must imagine, a lot of people, they don't have a lot of money. Okay? When you have a lot of money, you can buy a car, you get into an accident, just pay for it, it's fine, no problem, right? But most majority, why cars became mass adoption is because of insurance. Because you guys can buy insurance, that's why all of you that raised up your hands just now went to buy a car. Because at least when something happens, you know that you don't have to fork out a lot of money from your pocket. You have certainty. Am I right? And that's the reason why all these car companies, BMW, Mercedes, Honda, Toyota, whatsoever, are able to sell all these cars. Imagine if there is no insurance product in the market. Trust me, all these companies will not be multi-billion-dollar companies. Am I right? So, the impact of insurance industry is actually very important. Because trust me, if we cannot buy life insurance, maybe a lot of people may not dare to take the plane. Yes? What if it crashes? Right? It's a scary thing. So, the insurance industry have created many, many big industries. Even your airline companies, even your car companies, all these companies came up because there's insurance product that's available in the market. What we are doing now is we are the world's first company to provide insurance for cryptocurrency. Yes. Okay? Imagine Bitcoin. Just now, can I have a raise of hands again? How many of you guys have Bitcoin? Basically, the rest of you guys that never raised up your hands don't have Bitcoin. Am I right? Why you guys don't have Bitcoin? Why? Number 1, don't understand. Don't know enough. I cannot touch, cannot do. I'd rather buy a watch. I can wear. I can buy diamond ring. I can see, right? Correct? So it's something you can see, cannot touch. But to a lot of people, it's not only because they don't understand. It's because they are too afraid to actually come in. Because if I come in, what happens? It becomes zero, become worthless. Then how? Am I right? So imagine, what if you can actually participate in Bitcoin and know that your downside is protected? Would there be more people to come in to buy Bitcoin? Yes? Yes? Why? Because I know that if I buy Bitcoin, my risk is 30%. I can accept this risk. And this risk itself is protected.
Oh, wow.
Yes? So imagine what kind of positive cycle we will create. When more and more people know about our product, they know that, oh, I can buy Bitcoin now and be protected. Will more people buy Bitcoin?
Yes.
Yes? What will happen to Bitcoin's price?
Up.
It will go up, right? What it does is it creates a positive cycle for the whole cryptocurrency community.
Yes.
With it going up, will it trigger our insurance? No. It will trigger the selling part, but will the company lose money? No. And even if the company lose money, we have ways to generate returns to give everyone coverage. And that is the most important thing of what we want to do. Okay? Thank you everyone. Thank you for your time.